Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. When's the best time to plant a tree, Jerry?
Today.
No, 20 years ago.
20 years ago, yes.
Which makes today the best time to plant a tree for the next 20 years.
Agreed.
So we want to talk about preparing a portfolio for the long run and why you should be considering today. And especially when it comes to registered accounts, we want to talk about the good, the bad, and the ugly with registered accounts. There's some people that see a very dark side to them. Let's expose it and how to fix it. Okay. My name is Jeremy Wiseman. I'm Vice President of Guildhall Wealth. I'm joined by Jerry Correia, and we're going to be talking about precious metals. But first, let's talk about something that we just came across here with regard to gold versus the S&P.
And here at Guildhall, it's all about balance and finding balance in an unbalanced world and not omitting something that has been time-tested throughout the ages. This is gold ownership. This is gold diversification and full asset allocation and looking at the most underappreciated asset in the NATO block, gold. And this was a Substack post from Taylor Jay. He's an analyst out of the States. And he points out that gold beats the S&P by a mile. And this is him by Jay Taylor. Gold versus the S&P going back 24 years from January 1st, from 2000, Y2K, to May of this year. You had S&P performed. You gained about 268% over that course. The S&P was 1425, ends off at 53. And gold started at $290 to $2,400. That's over 468%. So gold beats the S&P by a mile, 468% versus the S&P's 268%.
It's a heavyweight performance. And the fact is that it's a simple performance because it's a physical commodity. There's a finite amount of it. You can only add, maybe 1.5% a year to the total, which is funny because if you think about crypto enthusiasts, they'll say, well, there's an absolute limited supply. Say, okay, do you know how long it would take to double the supply of gold? I don't think we're on opposite ends of the spectrum on this one.
Right.
And that does feed into the gold standard, which we're going to talk about in the next segment. But just in terms of performance, Jerry, talk to us about that. Give us some, what's your takeaway when you see a statistic like that of gold just absolutely high performance against what people would think of as what they should be putting it into, naturally equities?
Yeah. What it does, it gives us a bird's eye view of what gold has done over the course of over 2 decades. And it's very important to realize that no, not everything is just a day trade. And you don't just plan for the very short term. We look at the long term, what gold has done and the reasons why gold has performed and continues to appreciate versus a basket of major currencies that are losing their purchasing power because the major problem underlying the entire system and the weakness and all the imbalance that we're seeing is the currencies. They're all fiat. They're not backed by anything that is rare, that's scarce. You can't print. And in an age where people are looking to diversify away from worthless paper, this is very important to look at performance, to give yourself some comfort, some understanding of how things perform and when things will perform. And the timing is right now.
Yeah, and if you're thinking about an opportunity, the fact that all of this currency has been created out of thin air and all of these debts that have to be paid back in this currency have just been created out of thin air, all predicated on the future earnings of things. And if we can do it, it's obviously, I think it's the consensus is that people have finally realized that all of that money printing through pandemics and whatnot is what got us here. For the first little while, I think they didn't even realize where it was absolutely coming from. Of course, our listeners did. Those who have been listening to the show for a long time, we've talked about shrinkflation. Maybe 8 years ago, we were talking about it and noticing it. And among other things that we've noticed here on the show that we talk about with our clients in the office. But when you think about the amount of currency that's been created out of thin air, I want to bring to you a story that came out of King World News. Great follow for the gold market. Anyone who wants kind of quick hits on the gold and silver market should definitely be checking out King World News. They've got great interviews, great articles. They had one from Grady out of Sweden this week, who talked about gold's price target being 10,000 to 15,000, which, okay, that sounds amazing, but we've all heard that one before, right? We've heard 27,000, so we're not going to get too excited about that. But how about this? You know, everyone is focused very much on silver getting to $50. Now, if I said to you, Jerry, can we get to 50? What are the odds?
Pretty good.
Pretty good. Yeah. Probably some would say it's a foregone conclusion. It's just a matter of when. It's not going to be if, and it's not as though we're in early innings here. We're in late innings of silver easily getting to $50 over the next year or two. I mean, some have said it could happen this year alone. So I don't know. When the market starts running, it starts running really quick. How about this? Grady out of Switzerland says $50 of 1980 is equivalent to $806 today. And in 2023, the US dollar would put silver at $1,500 using the Fed's massaged inflation calendar. So imagine that. Silver inflation adjusted high to 1980 is $1,500. Imagine owning 1,000 ounces of silver right now.
That's exactly.
You're taking your little acorn and you are going to have a massive oak tree.
The fruit that this is going to produce, the wealth, there is a massive wealth transfer happening, and the opportunity to jump on this train, this opportunity is here at our doorsteps. I've spent the last 3 weeks studying the cycles of the gold market ever since Jim Rickards brought this up, the 3 gold cycles. And it's very important to know these cycles and study why do we have the first two cycles that happened in the 70s and we ended at 80. 2,000 ounces bought a house.
You study this stuff?
You have to.
You're a nerd, man. You're a nerd. You're
Yes.
studying gold in your free time.
You know what? I have to do it, Jeremy. It's not just for myself. I have to give myself first of all peace of mind. I'm holding a lot of physical, and I need to know that this is the right step for my family. And foregone conclusion, this is where we're going.
Okay.
Because the first 2 cycles we had, it's a 10-year cycle. The third cycle that we're in right now started in 2016. That's when gold hit 1,050. And it's a 10-year cycle. So roughly by 2026, we should have our peak at the cycle. And if we apply the gains of the first 2 cycles from 1970 to 1980 and 2000 to 2010, the average performance of those 2 cycles together combined was 1,400%.
1,400.
So 1,400% multiplied by $1,050 gold in 20.
Okay, you're taking it from the bottom of the market?
Exactly. That's where you begin the cycle, and to the end projects gold at about 15,000 US per ounce, which would put silver, if we go back to a 40 to 30 to 1 ratio, at about $500 an ounce.
And if we got to a 16, you're probably...
And there you go. That's the $800 to $900 level. 500 US per ounce multiplied by 2,000 ounces at the end of 1980 bought yourself a home. And this is what we're at today.
Well, I mean, listen, I like the idea that 1,000 ounces of silver probably cost you about $45,000 today. And if you've got 1,000 ounces of silver, and let's say we get to that $1,500 mark, I know it sounds crazy, but we've seen crazier in these markets, in lots of different markets. And assuming that, there's $1.5 million, you're buying a piece of property mortgage free.
Mortgage free.
Now, what if we're wrong? What if we say, okay, it's that 30 to 1 ratio, and you've got your 1,000 ounces of silver, and it goes to what we were talking about, $500 an ounce, and then obviously that's $500,000. Okay, what if you're wrong? What if you put up $45,000 and it does a quarter of what we're talking about here, and it only goes to $250? That's still $250,000 based off your 45. Now, the better question is going to be, where do you think the stock market's going to go?
Oh.
Can it double from here? Where's the numbers that says the economy is so good that the stock market's going to double from here? And how would it do it? Would they print a ton of money? Right? Would they just quantitative ease and throw it all in? But what would it be worth? What would the dollar be worth if that's how they pushed the market up? Now, I know that I'm making it very simplified. I'm probably oversimplifying it. But still, you've got to think about productivity. I mean, Jamie Dimon himself is saying, be worried about stagflation, right? The man from JP Morgan says, be worried about stagflation. That doesn't say stock market's going double from here.
Not at all.
So consider having some physical metals in your portfolio, if you haven't already, and getting up to that 10-15% allocation in your portfolio is definitely part of that crawl situation that we would discuss here at Guildhall, the crawl, walk, run strategy. So give us a call. The number's 1-877-8-SILVER. The website's guildhallwealth.com. Learn how to acquire physical precious metals for the first time. See what that's like, because it is a retail product. It's not an investment in that sense. Great time for Father's Day gifts. Give the gift of gold. Maybe get a 5-gram bar of gold. That would be a great gift. I would love it. What do you buy the man who has everything? Right? Give him gold.
Absolutely.
The number again, 1-877-8-SILVER. The website, guildhallwealth.com. Now, coming up in the next segment, we're going to talk about the gold standard. It's something that's been coming up. And of course, there's some news out there in mainstream land where they are openly criticizing it, which is a clue that it's probably something very good. And we believe that having physical gold and physical silver is an essential part of a portfolio because it's negatively correlated to the dollar. Most assets that you hold in a portfolio, equities, are valued in dollars, US, Canadian. And what do you do when they're printing into oblivion? They're not going to stop. And the debts keep rising, and so that dollar becomes worth less all the time. How do you stop that? You hold something that's been a store of value for thousands of years. You don't need to reinvent the wheel. You just need to hold some physical gold and silver as an insurance policy. Some people say an insurance policy against the stupidity of central bankers. You know, when you had a gold standard, you didn't have to rely on central bankers. But here we are relying on central bankers. So, Jerry, give us some updates on the stupidity that we're experiencing this last week in the markets.
Well, I mean, with regards to the central banks, a lot of hot air being discussed this week from the Federal Reserve. So the Federal Reserve, obviously, is the entity in the United States that is not federal, that is responsible for the setting of the interest rate. So this week, on Wednesday, the Federal Reserve kept their rates flat at 5.5%, and the speech was the one that caused the volatility on the downside for precious metals, albeit very temporary, very transitory, and a huge opportunity for the gold and silver, the Canadian gold and silver investors. This week, gold dipped. The Fed signals what they said was only one rate cut for 2024. This is despite all of other central banks in the G7 who are meeting this weekend, cutting rates. We had the Swiss start the show, the European Central Bank, Bank of Canada, England likely next. But for whatever reason, the U.S. is deciding to try to keep the narrative going for quite some time and keep the narrative at higher for longer. They can keep the rates higher for longer, but to the detriment of the banking system. The entire financial system right now is collapsing. It's crumbling. We brought information last week about the FDIC reporting huge unrealized losses, $517 billion, 63 problem banks. Further, this is not just isolated in the States, Jeremy. We had another off my desk, Flow Bank, which is a bank in Switzerland, shuttered bankruptcy. And not only banks, it's trickling down into big box stores. Walmart stores are closing down. When you start seeing that happen, this is a huge barometer. We got to keep track of what the high rates are doing with entities that are holding a lot of debt. And further, the FDIC won't even tell us. But what they did say is, what the truth is, if the people knew the truth, there would be bank runs all over the country tomorrow morning. That's how nefarious the FDIC and how much cover-ups the FDIC, which is the Federal Deposit Insurance Corporation, is covering over. Further, you have commercial real estate. Now that is a mess. That's the commercial real estate sector faces a triple whammy of falling prices, falling demand, and rising interest rates. The interest rates, they're killing the economy with high interest rates. And why this is important for us is the minute that they cut interest rates, you mentioned it, gold and silver are inversely correlated to the US dollar. So any country, including the US, when they cut interest rates, the dollar drops. And the US and prices of gold and silver will pop and explode higher. This week, more gaslighting happened. CPI, PPI inflationary data came out, both metrics showing cooling. Now, obviously, that's a huge gaslighter for everyone because prices are not dropping the way they're reporting. But it helps. It did help on the upside for precious metals. So right now, to close off the week, precious metals are finding support, very good support levels. So if you're thinking about getting into the market, if you're a Canadian holding your Canadian loonies that are losing purchasing power, give us a call, 1-877-8-SILVER, or visit the website, Guildhall, preciousmetals.com, and find out how you can own physical precious metals, either taking delivery of it. Come pick it up here in the office. Sit down, have a chit chat. Coffee's always on, and we want to sit with you and discuss even how to get physical precious metals within your registered account, like a lira. If you have left a corporation and you walked away with a pension, this pension needs to be protected. The best way to do that would be to get physical gold allocated under your name, held entirely outside of this corrupt, this financial system that's collapsing, and undigitize your wealth. Everything these days is just digital. The money sitting in your bank account is just binary code, ones and zeros. Do you want ones and zeros for your future? I don't think so. Do you want worthless paper in your portfolio for the future? It's not going to be there for you. It's going to be up in smoke, and this is why the powers that be, the media, they're demonizing the solution. They've been demonizing the solution for far too long. Last week we brought up that we could just switch out the silver, these companies that rely on silver for creating flat screen televisions, for creating missiles, for creating solar panels. They could just switch. So beware when you buy silver is what TD Strategy says. I mean, this is an utter failure. And actually, switching out, there was a funny article that came across. I don't know how to take this, but Boeing was in the news once again for their planes, and they were caught switching out titanium out of the planes for some other metal. It was some counterfeit titanium. So is this the type of strategy that TD was recommending? Just switch out. And this is causing the plane actually to tailspin, Jeremy. It started to spin in flight. So with the titanium being so important in these applications, silver and gold are just as important. And gold is actually being introduced, and it's emerging as an essential industrial metal now, finding critical new functions in the 21st century, from solar, wind, batteries. It's an industrial catalyst. It has plane applications. Gold. Can they replace gold? I don't think so.
No. Well, I guess there's platinum, but it's not as soft.
It's not as soft.
So
malleable.
It depends on what the industry is. Let's talk about, you've just talked about the fact that so much of silver's irreplaceable. There's de-dollarization going on, hot air coming from the Fed. They're using, crazy numbers to try to rig the game for a while. But there is de-dollarization going on in the world. And how can you reverse that tide? And we can talk about some de-dollarization in a little bit, but how do you reverse the tide? Well, you could go to a gold standard. And what does that look like? Interestingly, Jerry, I was listening to a video yesterday with JP Cortez. He is part of the Sound Money Defense League. And it was very interesting because one of the things he was doing is he was talking about all of the legislation that's going on in the United States, where one of the things they work towards with congressmen, et cetera, is to get rid of taxes on the metals.
Right.
We don't have that in Canada, but in the States, there's many states where if you want to buy gold or silver, you have to pay tax. Now, they're getting rid of that one by one by one, and that's something we've been tracking here as well. The other thing they've been looking to get rid of is to get rid of capital gains tax on gold and silver, because if you can get rid of capital gains tax, now you're using it as money. And then when it came to the idea of using it as money, this was very interesting, and I wanted to bring this up because from a gold standard perspective, he said you don't need a top-down entity telling you that you need a gold standard. All it could be is to get rid of these policies and these laws that inhibit the use of gold and silver as money.
Right.
I thought that was very, very interesting.
Unleash it.
Unleash it. No capital gains, no taxes to buy it. You can use it for fair payment. Now, obviously, you want the metal to be worth its maximum purchasing power before you spend it. But then there's lots of platforms out there, and more coming on all the time, where it can be tokenized or it can be stored and you can borrow against it. There's lots of different ways that you can end up using the gold without selling it per se, but also being able to use it as money, as a form of payment. So I thought that was very interesting. So the other thing is, I had a client send me a note. Brian, thank you for sending me the article. This is a classic article from CBS in 2019, and it was about Judy Shelton. She was put up by Trump at the time to be part of the Federal Reserve. They grilled her, and they didn't want her because she was sort of a gold standard enthusiast, and they didn't want that type of person at the Fed. I think her reputation preceded her. So this article it says, what exactly is a gold standard? It's a policy that links the value of a country's currency to gold. The U.S. adopted it in 1879 and allowed consumers, banks, and businesses to exchange a dollar for actual gold. That may sound like a solid deal, given the actual gold would back up your bucks. But there's a downside. A country can only issue as much money as it is backed by gold. Absolutely 100% inaccurate. You don't necessarily have to have a 1-to-1 standard.
Nope.
You could have a 4-to-1 standard.
A ratio.
You could have a ratio. And when the U.S. was on a gold standard, it did not stop banks from issuing loans.
That's right. They know all about that. They know fractional reserve banking. They know 10-to-1.
The upshot is that the country's gold on the gold standards have less flexibility to respond to financial crises or economic downturns. Currently, the U.S. dollar isn't tied to any specific asset. I love this one too, because basically what this is a critique of saying, listen, the Fed does so much better in handling crises than a gold standard. To which, I would invite Ron Paul. He's amazing at talking about this. How well do you think the Fed has done against all major financial crises? Absolutely horribly. All they do is inflate the bubble bigger for the next one.
Their only solution is to print the money.
And you pay through inflation or more taxation, which, by the way, they started to talk about maybe getting rid of capital gains tax. That was something that was whispered about at Mar-a-Lago this week. So I just thought that was very interesting, that this article basically looked at 2 reasons why a gold standard is no good, and yet it flies in the face of the success. And they admitted it in the article that while the United States was on a gold standard, they were immensely successful.
Yes.
And profitable, and grew so much that, again, it comes back to, do you really need central bankers and wizards behind curtains to create the type of safety net that the gold standard produces? And she's got some great ideas. We put it up on our Twitter feed. We'll put it out on our newsletter this week with this, and we'll also attach it in the YouTube portion when we put this show up on YouTube. We'll send you some of those links. I think it's time to start looking at the gold standard, especially when the BRICS nations are de-dollarizing.
That's the main point. I think they're very interconnected, and it's really forcing the U.S.'s hand, because the choice is theirs. Do we allow the U.S. dollar to lose this privilege of calling their currency the world's reserve currency? Morgan Stanley, the chief investment officer, a couple weeks ago, wrote to his investors that de-dollarization does impact the U.S. stock market, that it will impact, that this trend of de-dollarizing, if we lose the U.S. dollar standard, the empire will just dwindle. So we're going to have to get into that. We'll go into the de-dollarizing trend and the petrodollar.
He also said it wasn't good for the stock market.
Right.
De-dollarizing is not good for the stock market. Coming up in the next segment, we're going to talk about the good, the bad, the ugly for registered accounts. That's right, your RSP and your locked-in RSP, Lira, LIF, and RIF. As well, we will talk about why we think now might actually be the best time to buy a synthetic diamond. holding physical gold and physical silver is quite easy, although we understand it's very new to a lot of people. That's why we hold your hand through the process. We'll show you how it works. We'll break down the cost of doing business so that you understand how it all works out. You know, what's in the sausage? How does that all work? You know, one of the best things we get as phone calls that people will call in is, how does this work? No problem. You've called the right place. And we're glad you called us first. And we'll show people how to get involved in the market. Oftentimes it's start with something small and then, you know, start to figure out where you want to go from there. Maybe it's a TFSA. Maybe it's just continuing to accumulate on a monthly basis. And then, of course, sometimes there's the registered accounts. Now, not everybody loves registered accounts. We'll just say RSP for now. You know, the RSP, Lira, LIF, RIF, etc., RESPs. Let's talk a little bit, Jerry, about the good, the bad, the ugly with regard to registered accounts. The first is the good stuff is that you're deferring your income. So you get to lower the income rate for the year. And if you put in enough into that, you'll get a rebate. I mean, who doesn't like extra money in your pocket? And why are you giving it to, especially this government? What are they going to do with it? Right? What have they done with it? It's better staying in an RSP than in their hands.
Absolutely.
And why would you pay the extra taxes? So that's just the one side of the good. Defer your income, get the rebate. And if you think about it, let's say it was just for the sake of it, let's say it was $100,000 and you put up 70, but you got back $30,000. Effectively, you're buying silver at or gold at a 30% discount because you just got back 30%.
That's true.
Right? That's baseline if you don't have any other write-offs. Let's talk about the bad. The bad is that the money's stuck there. It's in purgatory. Right?
That's a good way of putting it. Yeah.
People would say that is the bad side, right? I would say it's a feature, not a bug. And I'll tell you why. But some people would say, well, you know, look, I can't touch it. If I touch it, it's going to cost me money to get it out because there's a withholding tax, right? But again, I would say that's a feature because I think that not everybody is amazing at saving money. And I'm sure you listening in the car right now, you're driving a Kia or a baseball game, you could maybe you are the one among your friends who is very good at saving. Maybe you are that person. Maybe you are the one who planted a tree 20 years ago and you've paid off your mortgage and you're feeling pretty good about things. You're not panicked. You know, times are tough. Groceries are more expensive, but it's okay. Maybe you're that person. Or maybe you're the one in the car who knows that person and kind of a little bit wishes you were more like them. I am not that person, Jerry. If I'm going to go work out, I need a babysitter. I don't have the discipline to go and work out on my own. I find it boring. I need a babysitter. What I love about the RSP is that it's stuck in there. Yeah. Put it in there. I can't get to it. That's the whole point.
Yeah.
That's the whole point. It's a fixed savings. Now, here's the ugly. The ugly is nobody wants to pay taxes. Do you want to pay taxes? Nick's in the room with us. Nick, do you want to pay taxes? No. Everyone says no. Nobody wants to pay taxes. But if you put the money in the RSP, eventually you're going to have to pay the income tax on it. And nobody wants to pay taxes. So many people will say, forget it, because I don't want to pay taxes.
Yeah, that's true.
Okay, then don't have anything. In 30 years, don't have anything. Good for you. You didn't pay them. But, of course, you never deferred any taxes either. So you paid them all the way along anyway. I would rather have a lot of money in my RSP and owe taxes on it. That's just me. That's just my own opinion. What's your opinion?
I agree. That's exactly what it is. And I'm like you. I need that discipline. I see the RSPs as just that. It's my Mr. Miyagi. It puts me into shape. I have my nest egg for my future. And I do believe with the whole revolution of seeing taxes being modified in the United States, it's a good sign. It's a good sign of things to come now. What we're hearing from people like Chrystia Freeland, who says, well, people want to pay taxes because we're doing such a responsible thing of helping the environment.
And fairness.
And equality. Great. No, this is my way of keeping money in my pocket. I'm not putting it in the banking system where it's going to be used for nefarious means, weaponizing my own money against myself. I'm sorry, I'm unsubscribing. And for those people who already have an RSP, there's no better way of treating your RSP and packing it up with gold for the future.
Now, many people in the audience right now, Jerry, are really curious to know if you're more like a paint the fence guy or more like a wax on, wax off.
I'm a paint the fence.
Okay. All right.
And I love ironing as well.
Let's talk about synthetic diamonds. By the way, if you want to get involved in holding physical gold and silver in a registered account, you use the number 18778-SILVER. You go to our website. It's got some information there, or you can just enter some your details, and we'll get a package out to you. The number is 18778-SILVER. The website, guildhallwealth.com. So, Jerry, I was talking with a friend of mine about who's about to get engaged, and he was talking about synthetics, and I was talking, we were having a conversation about it. And I remember helping a friend of mine with a white diamond. And throughout the process, he started with, I want to get the best I can possibly get. And it started off with like a white E or D, I can't remember, VS. It was like, that's what he could get.
I think I have a picture of it, actually.
And then the more we talked, the more we said, well, why go for that? You might as well go for the size, because if you end up having to sell the diamond, whatever happens, you're lucky if you'll get 20% or 10% of it. So you're better off to get the best effect that you can, the largest effect. So we got up to 1.5 carat. We went down from the E to the F, and we went from VVS down to VS, and we were able to get the larger stone. So I'm talking to my friend, and I'm saying, if it is really just the effect you're after, the synthetic makes a whole lot of sense. 2 years ago, you were buying a synthetic for 1/3 of the price of the regular white diamond. Now it's down 2/3. Mm-hmm. Right? You have a white diamond that's selling for $20,000. You can buy the synthetic, I think, for like $3,500. So for the same effect, you might as well do it.
Yeah.
Because neither of them were you ever going to get your money back. There's no money in it. It's just a luxury item that has no way of recouping at any point. And I love that because it made me realize, I love getting these constant realizations that when you buy a natural fancy colored diamond, you're joining the club. Mm-hmm. The club of exclusivity, the club of that asset never loses its value.
The elite diamond, absolutely.
You can, of course, we can go for effect, and we can get a mocked up, reverse engineered Rolex, or we could get a Gucci handbag that's not really made at Gucci, and we can look as though we have the effect, and that's totally fine. There's nothing wrong with that. But earning the pink diamond and earning the Rolex and earning the colored diamond puts you in a different elite league. It puts you in a different elite league. And that's what I love about the natural fancy colored diamonds. You are part of a club. You are part of that secret club that says, hey, someone walks up to you and go, hey, is that a canary diamond? Why, yes, it is. Yes, it is. It is real. It is natural, baby. And it is fine.
Exactly.
The number, 18778-SILVER, the website, guildhallwealth.com. We're going to wrap it up in the next segment, but if you want to get involved in the gold and silver market, you can go to guildhallpreciousmetals.com and pick up a tube of maples, maybe your first ounce of gold. And, of course, if you want to hold physical precious metals in a registered account, and maybe get yourself 1,000 ounces of silver with the potential of silver going to $800, or as Grady out of Switzerland said, maybe even $1,500. That's something that you can hold physically in a registered account. We think you'll find that when you own physical precious metals, especially over a longer term period, it really does give you peace of mind. I love watching clients who go from that just break even level, Jerry, of maybe they're at 10, 15%, to once they get up to being ahead by 30% or more, where that comfort just really kicks in. Really, at that point, it just becomes how many ounces do you have, not about where the price is day to day. However, we do have to talk about the day-to-day in the market as well. not something I'm very interested in per se, but we did see a significant pullback this week in the market. We saw silver go dip below $30 an ounce. Gold really did hold in at the 2,300 mark. But tell us what happened this week.
Well, they really took advantage of the inflation number that came out, which is, again, it's just a gaslight figure. The Fed spoke, and it was an opportunity for them to create a lot of paper in the markets. So we follow a gentleman called he's called the Dude, actually, on the X, and what he reports weekly and almost daily is the data for the silver market that comes from the commodities exchange. And he wrote the total volume in silver market this week. So this was the beginning of the dip in the silver market. The total volume of the silver market yesterday was 90,000 contracts. Remember, each contract is for 5,000 ounces. Yesterday, there was a total of 450 million plus paper ounces traded. The COMEX had 8 deliveries. The world yearly production is around 800 million ounces. So they literally traded in one day. They created a half of the yearly production worth of paper. When you create the paper and when you start trading that, you're creating artificial supply of the very physical asset that they don't have. Remember, there is over 400 of these ounces, these paper ounces, for every 1 ounce available. These banks love fractions. They love fractional reserve banking. It's actually not even a fraction anymore. It's zero reserve banking that we have in the United States and even in Canada. There was a woman that wanted to create a one-to-one bank. She was shot down. Her idea of creating a sound bank for the people and having one-to-one reserves was shot down. They love their fractions. And in the middle of that, why is this important? Is because the metal is moving. There is an arbitrage that is putting the exchanges on notice that you are going to have these contracts expire and they're going to be defaulting.
So I was going to ask you, I would say if someone is hearing that for the first time, they're saying, well, why would I want to be involved in a market that's being so heavily manipulated? Now, I would say, well, everything's manipulated.
Everything
is. The fact that there's interest rates says they're manipulated. It's a question of when do these manipulations end? And what you're saying is it's ending because of arbitrage?
And the silver is the Achilles to the corruption of the system. Everything is corrupted. Ever since 1983, when the Bureau of Labor Statistics economist Robert Gillingham decided to, his argument to remove home mortgage payments from the CPI. So obviously, you're going to revise the figures lower and lower to fit your own narrative. That's going to continue. The lying will continue. Manipulations will continue. But when you cannot back your contract with the physical asset that is supposed to underlie and provide value to those derivatives is no longer there, well, it's naked. And that's what's going on with these banks. The banks are going under financial stress. The banking stress is escalating right now. Banks are shutting down. The Fed discount window loans hit $6.46 billion for the week that ended last week. It's up. Significant increase signals rising stress in the banking sector. That's
banks needing liquidity, and they go to the Fed, and the Fed says, here's $6 billion across all these banks. You need the money. We're here to help you.
And the experts are warning of increased reliance on emergency funding right now, especially in regional banks. This is going to continue. And while this is happening, the petrodollar, which is the bedrock of the United States economy, is ending. Just last week, Saudi Arabia will not be renewing the 50-year petrodollar agreement with the U.S. Instead, they'll be trading other currencies, including the yen, the Chinese renminbi, euro, the yuan. This has to be treated like a black swan event. Remember, the whole revolution will not be televised. The Euro Cup is starting. It's Pride Month. We're all fixated on other things. But when you saw the petrodollar ending, it's an old standard leaving, and incoming of a new standard is coming. We have to embrace this.
And also because the U.S. weaponized the dollar, Russia took all U.S. dollars off of its exchange, and they started adding, I think, yuan to the exchange. So the BRICS nations are getting tighter and tighter. It's a story we're going to have to keep watching of how the moves that the BRICS are making. But to do that, you have to tune into the Real Money Show. And if you want to own some physical precious metals in your portfolio, we help you do that. Fully allocated accounts, fully segregated accounts. Clients can go to the vault, personally audit their holdings. They have the peace of mind that they have physical product held in a vault facility outside the banking system, but as part of their retirement portfolio. You just can't get better than that. And with the type of performance we've talked about in the past and the type of performance we expect in the future, this is the time to be getting involved. Now, if you've missed a show, you can visit us on YouTube. We post the show there. We also put it on Rumble. You can follow us on X. You can follow us on Telegram. We also put some stuff out on Instagram. But or as well, give us a call. We're always happy to chat about the markets. The number 1-877-8-SILVER. The website guildhallwealth.com. Jerry, thank you so much. Great chatting with you this week, and thank you so much to our listeners for joining us this week. And we can't wait to speak to you next week here on the Real Money Show on 640 Toronto.